Oil prices post their first weekly gain in 5 weeks, and Eurozone inflation hits a new record high of 10%. You're watching the Daily Brief with Forbes. I'm Ramia Faraj. Oil prices are on track for their first weekly gain in 5 weeks today, underpinned by a weaker dollar and the possibility that OPEC Plus will cut output when it meets next week. Brent futures for November traded at around $89 a barrel, and West Texas hovered at $82 a barrel. Oil prices were shored up by a drop in the dollar from 20-year highs earlier this week. A weaker greenback makes dollar-denominated oil cheaper for buyers holding other currencies. Eurozone inflation zoomed past forecast to hit a fresh record high in September, reinforcing expectations for another big interest rate hike from the European Central Bank in October. Eurostat data shows price growth in the 19 countries sharing the euro accelerated to 10% in September from 9.1% a month earlier. Inflation was still driven mainly by volatile energy and food prices, but continued to broaden out, with virtually all categories from services to industrial goods now showing painfully high readings. The pound jumped 1% against the dollar today after official data showed the UK economy is not in a recession as previously feared. Sterling, which struck a record low against the dollar on Monday, recovered to over $1.12 this afternoon. Britain was a net exporter of electricity to Europe in the second quarter for the first time in over a decade. That's according to a report by Imperial College London. From April to June, 8% of the electricity generated by Britain, or around 5.5 terawatt hours, was exported through subsea cables. The trade surplus was worth around $1.67 billion for the UK economy. The rise in exports follows a fall in French nuclear power output due to outages for maintenance and strikes. Russia is implying the U.S. is responsible for leaks spewing gas into the Baltic Sea from Gazprom-led Nord Stream 1 and 2 pipelines. The EU says it suspects sabotage is behind the damage. 4 days after the leaks were first spotted, it remains unclear who's behind the attack on the pipelines that Russia and Europe spent billions of dollars building. But Russia says the U.S. stands to benefit and that leaks are in a territory that's fully under the control of U.S. intelligence agencies. Gazprom shareholders backed Russia's biggest ever dividend payout, totaling $21 billion at an extraordinary general meeting today. Shareholders backed an interim dividend of 89 cents per share. It's the highest payout in Russian corporate history. Gazprom shareholders in June unexpectedly decided not to pay dividends on last year's results for the first time since 1998. Barclays has agreed to pay $361 million in fines for staggering failures that led it to oversell $17.7 billion of structured products. The conduct concern dates back to March this year, when Barclays disclosed that it had accidentally oversold complex structured and exchange-traded notes. It overshot by about 75%, a $20.8 billion limit previously agreed with the Securities and Exchange Commission. The SEC found that the British bank failed to implement any internal controls to track the transactions in real time. I'm Ramia Faraj. This is the Daily Brief. Thanks for watching. Have a great weekend.